All right. So today again, we're going to be talking about engineering a move all the way from zero. So let's go through this and always start with the highest time frame down. That's the first rule. It's why we always start with highest time frames from all the sciences that we use. We always work time frame down. This is no exception. There never really is an exception. We have a break of a move right here on the weekly. Right. So if we were to engineer this down, we have to go +1, -1 the entire way down the move to see where this thing is going to break. So the first thing we do is go down a time frame, and we look at the two parts that would break this move, and that would be right here would hold the move down on the daily, and what would break it up would be right here, your origin level. You do have this as well. So technically it's right here. So we're going to leave that there. I'm going to also add this origin because I do think you have a scenario where both can hit. And when you're looking at the daily origin to break, you're going to get into a scenario where up here you're protected by 4 hours and things like that. So if your +1, -1 would be 2 dailies, we have to remove one of these dailies. So removing one of the dailies is now going to be a choice of picking which one you want to take away, right? Is it you want to take away the one up top, or do you want to take away the one below? For us, we're going to pick the one up top because we already know that if this is going to break the move, there's going to be 4 hour levels protecting it, which is here. And this doesn't give you that same thing. So for that reason, we're simply deleting this origin as it'll just kind of go through it and engineering from there. So if we were taking along, this is our +1 right here because we want to break the move. So if you took along here and you're saying you want to break the move, that goes here. That's your +1. So this is your +1 and this would be your -1. If you were taking a long, if you were taking a short, it would simply be flipped, and this would be your, oopsies, that's the wrong one. This would be your -1. This would be your +1, because if you're taking a short, you want this to continue to hold to move down. So your +1, -1 is on your screen on your daily, and we're just going to continue that trail to find out where this move can go. So we've got both parts of that move. Let's rewind this to yesterday when that hit. We'll just kind of go right here. That's perfectly fine. So just right off the bat, you see that you have a weekly, and then you have your +1, -1 on the daily. So this is holding that move down, right? So that's the first thing we have to be aware of. And then we're going to go and find the next parts of this move. So you've got your 4 hour +1, -1. So your 4 hour would be something like this right here as one of the 4 hours, and your other 4 hour would be like this right here. So you have +1, -1, this holding the move down. If you were simply to flip the chart, all you're doing is going and back testing the backside level to keep moving down, or you can flip your chart back over, or even the front side level, but one of these levels is going to break the move. So when we flip this back over, we can start to investigate a little bit more on the top side. So let's engineer out the top side first, and then we'll engineer out the bottom side. So we're going to engineer off this daily because we're just moving from the top down. So we want to engineer weekly to this daily just because it's proximity closest to this. Then we'll do this one down here because this one will be pretty easy to find. And then this one here is obviously going to be the one in play currently right now. So that, is going to give you a little bit of a different set of information to work with. So it's going to be a little harder because we're also in that move right now. We're testing that daily, and then you're going to have to engineer all the information back from that. So we have a 4 hour level and a plus and a minus. So we don't really have anything else in here. So there's nothing else to base it on. We can't go this backside because it has to be above that level. And, we're not engineering off this anyway. We're engineering off this. So the point of this +1 to break is that you actually can hit the daily level in both spots. So you kind of have to work beyond this wick, and you have to start looking for combo levels to find the part of the move that's going to break and the part of the move that's going to hold. So I feel like this backside will hold the move, and what you're going to do is you're going to have to find a combo level inside the range. So now we've got a range defined, and the range we're going to color in a different color. Meanwhile, just keep in mind that this is still the 4 hour. So what we'll do is we'll go with like a deep orange color because that's kind of close to yellow. And so this is your range right here off of that 4 hour level. So your range is going to be somewhere in here. So we have to find that combo. So we go to the hourly, and we have this will diminish down to the hourly. Let's just quickly jump up to the 4. You see how that's deeper than the 4. So we're already on the right track. You're on the 4. Do you have any origins or anything back here? No. Remember, we can't go above this daily level because that will try to break the move. you do have something else that can break, and then you've got this trail of 1 hour to 1 hour right there. So that's fine. I do like that 1 hour so far, but let's keep working with this thing. Let's see if there's anything else we can find below the daily, but above that. We do have a 15-minute right here. You have a 15-minute backside here, which also that daily tests that 15 right here. So we wouldn't use this. Instead, we would use something like this. This is not tested. Body or wick, I think 283 and 305. I think at that point you're just gonna sacrifice the profits and go 7%. I think you're just gonna sacrifice the profits and go for that. So we're diminishing this down to find levels, and we've got the 15 here, and we also have the 15-minute level that gets here and follows that trail. This 15-minute level gets hit there, and this one's not hit here. So you could deep dive the origin to this level. So I do think that's one possibility. Deep dive this origin here to the 15, but we also do have this right here, which follows a trail to there, which now follows the trail to here. So you do have 31,300, doesn't quite reach that. So you're gonna have kind of a splitting of a difference here. You're either not going to hit the origin and start laddering down, giving you interior range trends, and the range trend is what's in play, or you're going to deep dive that, go up, and then have the actual daily give you something completely different, which would be hard closes. So if we go after this level, hard closes are activated. If we go after this level, range trend is activated. So there's a big difference there, and that's derived off of this daily here. So you've got one scenario again where you've got range trend because it's still inside of this range and you've managed to stay underneath that daily. And the other side, you have a hard close scenario. So, this is going to go like that. This guy here will have to do this and hard close over top of that daily or whatever level that we decide at that moment is important. So that's engineering the top side down. Fairly straightforward, very easy. I don't even really need if we need to have this hourly on board here. So that's the hourly, that's the 15. So this is like that. You've got your 15-minute there. I think you've got all your ranges covered. So you've got what will fail the move and what will start to put the move in succession. And then you're going to have different reactions on, on all of these appropriately. You're going to say, okay, if you hit this level here, this backside, it's just going to continue this 4-hour trail. I don't actually know if there's a 4-hour trail. Yeah, it's just going to continue this 4-hour trail here to here. And then it's going to create like maybe another 4-hour candle here and give you the next one here. And so that just continues the laddering down, and you get very much your compression trend, or I don't want to call it a compression trend because that's not a real thing, but you just get your trend that's going to control the move and keep moving down and cycle against the bigger pieces. Something that controls this and not this piece here. So that's pretty straightforward. You've got your weekly that's giving you your daily, and your daily is derived down to the 4 hours on this side here. That's going to protect that daily. So we've really engineered all of this stuff up here like that. So that's good. We've got a pretty nice clean scenario. Other scenarios that can happen is you go up to this hourly, you create like a ladder point somewhere to move up, something like this, where you maybe have a valley here that needs to close. You can't really see what kind of architecture is built up to. So we just have to kind of assume that there's a hold level there, and then it, continues to hold that move. And then, you create this here to float the bottom of this, giving you this as the reverse level, right? So just going through that one more time, because that's a little much. If you've hit this level and you've spiked above it interior wise, you're also looking for your interior floats, which would give you, if you did deep dive past this valley, it would also give it to you as the reverse retest here to move up to the next target, and that would give you your range trend to control this little attack here. So like you just get all your pieces filled in by doing this. You just get every piece that you need, or even maybe there's something here like this, however it forms out, where you can have this interior component, and then that interior component you can float above this, right? So like if you do go above that, you float it, the range trend holds above, that activates your reverse levels, and that's when you would buy your reverse level, when you have a float interior range and a reverse that's gone deep past it, and you've also, so that's kind of like one of the cues to create a reverse level is you have any range, right? You go above it, and you have that reverse level is already something that can be used. So whenever you have a float like this, so again, that's kind of that, let me back up. That's that cue where you would say, okay, when would I use this as a reverse level? This one here, do I use this as a reverse? If and when you do that, when you have a float right? So if you go above that float and you can create a range, that's when you use a reverse. If you stay below this, you would be more in a ladder situation where you're trying to build, because it's all about building this interior range trend like this, right? So that's where you would get that. There's no reason for you to go to the greediest ladder point of this. The greediest ladder point from what we've drawn is our reverse. And the only way you get to the greediest ladder point is by exposing also on top of that, the move that can bring you to that greediest point. So float supports the move to the greediest point and you move up, right? So that's a very easy way to see reverse levels and you know, where they go and what they do. So that's that side of the chart. That's good. We've got that done. Now let's look at the current. Current now is daily, and we're doing the exact same thing. We're working from the daily down. So now what we need to do is we need to say, okay, you're either going to, so actually, you know what, let's reverse it to just like maybe this point here. That's perfectly fine. Just because there's too many candles developed there. And at this point you'd have a 4 hour here, right? So you'd have your 4 hour like so, and then you would have your 4 hour, go one more candle here. That's fine. We can do that. We can use that one here. And you'd have your 4 hour here, right? You would have at first had it here. You never got above it. You did get above it here, but then the move kind of rejects here. And then this is where you have to say, like, you know, at this point too. So even let's step it back so we're not doing like a biased kind of thing, right? So you wouldn't have it back here. Like you wouldn't have this here like this, because you still have to develop this. So once those two are developed, then you move one candle forward, and that's where you get that hold level. So you know what you can lose on the bottom and on the top. And then that's when you can go and start saying, okay, well, you've got your hourly levels that'll control it. So there's no hourly holds we really need. So in order to break out of this, we need to go here to find this origin here on this side, kind of the piece that controls that side of the move. And then we'd go and we'd work down to find the other origin. So like right here, right? So now you've got your 2 4 hour levels, and which 4 hour level is going to create and hold the move is going to be based on which hourly level breaks. And then you would do the same thing. And when that hourly level breaks, you would look for your 15-minute levels. And then when those 15-minute levels break, you would look for your next and next and next and next. And they're just kind of a queue that follows through. So we can just, you know, work through this chart, and you can see you just bouncing back and forth between these hourlies, trying to establish a 4 hour hold somewhere. And then this moves to here. But again, remember, in order to establish this now, we need to get outside of the constraints of this hourly, because you're just going to keep creating new candles like this and like this that keep moving forward. So we can just go back to that hourly. We're looking for a hard close here. So if we wanted to long, right, we would need to get above this, hard close this hourly level, and then you can re-long that 4 hour. And then the same thing with the bottom side here. You would get underneath this, hard close this side, and then you could re-short here, right? And that's going to change obviously if you see 15-minute levels, but we'll talk about that in a moment. But let's just focus on following this move for now to see where this side breaks, because the next thing you're going to do is you're going to say, okay, 15-minute levels, because that's going to show you the degradation of the move. You've got the oopsies. Let's go back here. I hit the button by accident. Let's just kind of rewind it back to here. That looks fine. That's the degradation of the move, right? You're going to say your weekly level has given you your daily rejection. So your weekly rejection gave you your daily rejection. Your daily rejection is giving your 4 hour rejection. Your 4 hour rejection is going to have to be, so in order to lose as daily, you have to lose the 4. And in order to lose the 4, you have to lose the 1. And when you lose the 1, you have to lose the 15. And then the 15 to the 5, and the 5 to the 3, and the 3 to the 1. And then finally you get to this moment where there's a 1 minute candle, it gets lost, and you just go through this huge market crash when you're sitting there and you're saying, oh yeah, but there was bigger levels still in play, but that's all derived from the weekly. So perspective to where it's derived from. If our top level was only derived from the daily here, we would just be targeting daily to daily. Because it's weekly, we're now targeting the weekly on the bottom side. So I'm not 100% sure if this is the weekly level that we would use, because I haven't done that analysis on which weekly, but if it's derived from the weekly, it's going to mirror or Pandora's box to the next weekly until that queue breaks down as well. And then it would go to an even larger thing like the next range. So range or weekly. So because this is derived off the weekly, that's why we can do it from the weekly to the daily to the 4 to the 1 to the 15 and down. Otherwise, you would just be going and just breaking to the next time frame up. In crypto, we use monthly candles very rarely, and if you're breaking that weekly, you'd have to go after a monthly. But we don't really use monthlies in crypto, so that's not something we would look at. We would just simply go to the next range. So from here, let's just continue following this move. You really need that hard close on either side, and you're going to see this thing bounce back and forth all day long, struggling to find whichever spot you're going to break or move down. And right now it looks like it's moving down because it's being derived off of this daily short right here. So this is the daily is holding it. You're starting to do things like create trends. So you've got something like this, and we can just even pin it to here, because I believe that would be a 15-minute. 15-minute would have been there. You go here, you hard close to there. So that's fine. So you've got your kind of trend right there, and that's fine. We can just leave that for now. You just looking for that hard close. Is this hard close? That's a question. It is hard close. So when you hard close this, let's go to a 15-minute time frame here now. The next thing you're going to do is to see if your 15 can hold, because now in order for this to break, it has to target the 15, right? And remember, we've derived this all the way down. So you're starting to set up the break of the move like this, because you've lost the 4, you've lost the hourly. It did hard close that. Now you're going after the 15. So if you go to the 15, you would either have like an automatic buy scenario where it becomes an automatic because it's the next level to be tested. So the automatic can happen two ways. Let's say the 15-minute level is right here perfectly on the nose. You lost the hourly. The 15 is going to be the piece that controls it. You can hit that 15. It's an automatic level, but that doesn't necessarily mean you just sit there and hold it. This is a scalp. And if it develops this thing where there's a 5-minute here and it hard closes that 5-minute level, like, then you're just going to go down below the 15. So then you would have to get out if you have a 15-minute level, and alternatively you bought it, but then it starts developing up, right? And you're starting to build architecture back up. You've lost the 15, but now there's going to be some kind of 5-minute level that you need to look for and target. So that's kind of the thing there. So before we go to the 15, that would be an automatic, but that automatic doesn't necessarily make it perfect that doesn't necessarily mean it's guaranteed profits. It means it's a great spot to buy and to manage your trade next. So if you go to the 15, you can just kind of look at where the untested 15-minute level is and the piece that breaks it and the piece that holds it. So then you would have 15-minute levels going to hold it up, right? So we're going to do this right here. We're going to go 15, and we'll just put this one here. This is the break of the move. There's no other 2 candles, so it would have had to go to here to break the move. It didn't. Instead, it laddered here. So that's going to hold the move up and give you your hourly break, targets the 15, goes straight back up, right? Goes right back to trend. So the move is very straightforward now. Like, we are engineering this thing to be exactly what timeframes need to be tested on the exact spot. So the whole kind of connected ethos to this entire trade is we were using the daily to understand what 4 we need to gain. And in order to understand what 4 we needed to gain, we need to look at which hourly would break. And when that hourly breaks, we need to look at which 15-minute level you should target. So you could actually, in that scenario, you could have set a trade here and it would almost always be correct as an automatic, because it has to target one of these 2 levels, and this target will always bounce but never guarantee to hit, right? So this will always bounce the trade but never be a point that's guaranteed to hit. So you might only just bounce this for 10%, or it might bounce all the way up, but it becomes kind of an automatic trade. Or you could have taken the 15-minute hold level, and that's more indicative of moving up because it didn't break this. So if it's not going to break the move, that means it's going to hold this part of the move and try to regain this 4-hour and go and try to break this top side, right? So that would be, if in theory, if this is correct, if this breaks the move and this holds the move, then if you have the target that's going to hold the move, then you're going to be trying to gain this hourly. So now you're kind of creating a Pandora's box between this and something up here, right? So like some superficial level up there that's not created yet. So we can just play this move out, hit play, and just kind of see what happens here. I don't know if there's going to be any 5-minute levels here. Okay, trading view. Hello. For some reason, it won't let me get my 5-minute levels. Can we go to hourly? We can go to hourly. Can we go to 5 now? Okay, well, for some reason, TradingView is broken. I'm not quite sure why it's not letting me access 5-minute levels, but okay, there we go. So then your 5-minute level, right? Right there. Perfect. So then you have your 5-minute level, which also becomes your next rebuy, because that's also going to hold the 15 to the 5 hold. It becomes the perfect rebuy. As you can see, you could have even bought the wick and you would have been fine. As long as it holds this move, it's going to move up. So if you miss the 15 because you automaticed right here, you could simply see that this held the move. Your 5-minute becomes your next automatic. So you miss the first part of this trade, right? You miss the first pump of this trade, which is 80%, but now at least you're in the second piece. So you can see very easily and very clearly, when you're engineering moves, you can see, hey, if this is to break the move, that means we wouldn't look for a bounce to rebuy a 5. What we would do is we would do the opposite now. We would look for this same 5-minute level off of that 15-minute bounce, but what we would look for is the hard close here. And the second that hard closes, you would buy and it would just sink straight to the ground. That's if you hit this level. You would be playing this side of the 5-minute chart. But because you held the move, you'd be playing this side of the 5-minute chart. So your automatic becomes, in our scenario where we did hit this 15-minute, it becomes buy the 5. If it hit this level, the play looks like this. It goes here, it tries to ladder this move, right? And it has trouble getting back over this, and it hard closes a 5-minute candle like that. Automatic short, this thing's about to sink. So you can see the stark difference between holding the move off the hourly versus breaking the move off the hourly, and how you would play it thereafter, how you would play that 15-minute level being hit and held, or sorry, that 5-minute level derived from the 15. And it gives you your perfect trade. Like you literally have picture perfect trading, no errors, no mistakes, and you're engineering the move to give you impeccable accuracy. So it covers rebuys, it covers automatics, it covers basically everything you need to do in the trade. This is like trade management, highest level, how you get in trades, where you see them, your automatics, the perfect entries, how they break, how they move up, where you can expect if this move goes up and you create a 5-minute level, that 5-minute level becomes an automatic rebuy. If you hit this level and you create a 5-minute level and then you start to create a range trend underneath that 5-minute level and you're sitting here, that becomes an automatic short. And it just gives you like instant clarity. So we know, if this is all correct so far, we know that now we're going to move up in this move. So there's no plays where you should say like, oh, here's a little tiny 5-minute level. It's going to be something that I need to be aware of. Like you don't even consider 5-minute levels here at this point when the 15, because you have to remember what this is derived off of. This is derived off the hourly failing to try to dump the move, and the 15 held the move up. So that means you're instantly targeting this to try to break. So what kind of target could you go after? Yeah, okay, let's take a look. We've got the hourly there. We've got nothing really up here. So now we're engineering the top side. You've got a 15-minute right here. Okay, well, this looks like a good target. Yeah, I think that's pretty fair. You go for the 15-minute. What will be the origin level? You're going to deep dive past it. So then we can say we're going to create the float from this to this being a higher time frame float. So let's go above here. So let's just take some profits above that level. So I think like something maybe even right here, I would measure this, and let's turn this level a very specific color. Let's just go like this orange color, because we don't use orange. So let's use orange for this. So then I would just start measuring the difference here and just say, you know what, I would like maybe like an extra 15%. Yeah, okay, 15. Let's measure that again. If we're going to move up 15%, is that too greedy or is that good? Yeah, I think 15% looks good. We might miss the trade, but 425, that seems about right. Might go way higher, might go way lower. Point being is that we need to create this right there to float this wick off that daily level to start to create the architecture to break up. So let's just kind of like hit play, see what happens. Don't know exactly how high we're going to go. We hit that hourly there. That's that part of the move we hit. Oh, that's perfect. Nice guess. I knew from earlier it went above this because it was on our charts earlier before we hit the replay. So that's not a surprise that it goes above that, but then that's how I would have measured that. How high it went, I had no clue whether it was going up here or whether it's staying here, but that's how I would measure it. I would say like, what's a good take off of this level? 20% to here, 15% above the wick. I think that's reasonable without getting too out of line for an origin level. Like, I think this starts to become like 20% above the origin starts to become like a really big push. I think actually, to be honest, I would have rather been above that origin, above the daily. I would have kind of rather been around 400, I think. I think this is actually a safer trade. Regardless of nailing this, okay, fine, we nailed this. I honestly think I would have been a little more comfortable around like right under 400, just because I'm measuring here and I'm saying like, look, this is a pretty decent trade from here to here. How much percentage is that? That's already 79%. I mean, I'm going to be pretty happy with 91 because I know that pullback needs to happen to see what it can hold on this move. So now you've taken this entire move, the architecture from the weekly up to see where something is breaking down, and you've seen every piece of it derive down, and we got all the way down to the 5-minute. Does the 5-minute end up supporting the move? Because if this 15 hits, that +1, -1, 5 has to hit there, or you would be engineering something that's going to say, oh, this is failure in the move. So like if you hit down here, this would have let's get the same color. Let's just copy paste here. Much faster, much easier. You would have hit this same move right here. And I think this is the part of the move where you're like, oh, if you hit this 5 minutes, so 15 minutes is in succession, 5 minutes is in succession, that means we can go here. Alternative scenario, 15 minutes, let's just delete that. 15 minutes is in succession, 5 minutes is breaking. I would then look to short something like this, right? I would then look to short something like that to see if this can hit. So then that would be my trade, would be from here to here. And then I would also like to measure if there's 5 minute levels in here that can hit, because that will break the move. This will also combo it. So you're going to hit both points at once. So now you're also marking down to the 3 here. So then you'd be at the 3 and you'd say, okay, well, what else? Oh, that also hits the 3. That's also the 3. So you've got this right here. Now you have like, which level does it hit? Does it stay on this or does it go after this? Because that's going to be your same scenario. If it hits this level right here, you're only a 1 minute candle away from breaking this whole move. So you're right at the edge of the move. If you had hit this level instead, you would have been right at the edge of the move. A 1 minute candle is going to cause the dump in that, that's going to fire it in that direction, and it's just going to crush the entire thing. So this is like a high level breakdown of the architecture and the way that it flows, derived from polarity off of the weekly highest polarity point. And if this was a 4 hour, this whole chart would be the same thing. It's just, it would dump much faster, because you wouldn't have as many levels. You'd be taking out 2 of the levels here. So this 1 hour moment would be 2 time frames down. Everything would be 2 time frames down. So that 1 hour would be the 5. This level it hitting here would be the 3, and then you would have had to build like, so the whole move would have dumped off of a 1 minute candle here, and it wouldn't have had a second chance. And then if it was the 4 hour level here, the 4 hour level at the top, it would simply go and target the daily. Like, it would not be going after its next move. Like, it, with the weekly here, you break this, it's targeting the next thing up. If this was a 4 hour, it would simply just going in and be targeting the daily. So if you break this, you're likely not stopping at this daily, but if this was a 4, you likely would stop at this daily, right? So that's just kind of the difference, and you've just engineered the move down. So like, regardless of this is a weekly or not, whatever color it is, you're engineering down off that, and this is how you would do it.